Hey everyone, Aaron here. Today we're breaking down a classic situation that separates calm traders from nervous ones. When everything goes according to plan, discipline is easy. But when a loss hits, or the market suddenly flips behavior, that's when you get tested. In this video, we'll run a series of the trades of the 1 minute chart using a simple combo. Level plus candle reaction plus RSI 14. RSI isn't a magic button here. It's an extra filter that helps you see when a move is overheated and when a pullback is more likely. We'll be trading on iFinex, the Australian dollar and New Zealand dollar. High payout, and I'll show the exact sequence from the first entries with the bearish move to the movement when the market starts recovering. If these breakdowns help you, subscribe, hit like, and check my Telegram, link in the description. I share entry checklist, a journal template, and rules like how not to fall apart after a loss. Let's get to the screen. All right, we're here on the iFinex platform. Chart type is candlesticks. On the 1 minute chart, candles show what matters most. Impulse speed, wicks, and where one side starts losing strength. I open the instrument list and choose the Australian dollar, New Zealand dollar. Payout is 95%. For a series, that's very comfortable mathematically. Next, I set the time frame to 1 minute. The 1 minute chart is disciplined. You don't need to win by guessing, you win by acting on confirmed conditions. Now I add the indicator, RSI 14. Indicators, RSI, period 14, done. And I'll repeat, I don't use RSI as an entry signal. I use it like a sensor. It helps me judge whenever the move is overheated and supports a state of momentum. Let's start. Trade number 1, short entry from resistance. First trade, $100. I entered down. Why? Price hits a local resistance area and the upward move starts slowing. On the candles, I get a clear clue, an upper wick. An upper wick at a resistance means buyers tried to push higher, but sellers stepped in and price didn't hold. Often that's the first sign buyers are losing control and a pullback down becomes more likely. RSI also helps here. In the spots, it often shows the push up is tired, not necessarily by one exact number, but by behavior. Momentum isn't accelerating and the move looks overheated. Conditions match, resistance plus slowdown plus upper wick plus RSI supports weakening upside. So I entered down with $100. Waiting. And the trade closes in profit, plus $195. We log it. Next, still by the plan, but no chance. The market still needs to be read, not believed. Trade number 2, follow through with the bearish impulse. I increased the amount to 150. And here's the key, I'm not hunting a brand new perfect reversals. I see the market is still moving in the same direction. The bearish impulse holds, buyers aren't stepping in, and any bounce attempts looks weak. They get sold quickly. You can see it in the candles, no strong bullish bodies, no clean holding above, and price gets pushed down in a series. So the logic is simple. If the down impulse is still alive, we don't fight it. We trade with it. I entered down with 150. Waiting for expiry. And it closes in profit. Plus $292.50. 2 trades, 2 wins, but that's not a reason to relax. Next comes the moment where the market tests discipline. Trade number 3, pullback attempt up and a loss. I increased to $200 and enter up. The idea at entry was a pullback upward. That often happens. After a series down, the market bounces and sometimes it gives you a cleanup move, even on the 1 minute chart. But here buyers didn't support it enough. The impulse up is weak, price can't hold higher, and it quickly falls back under selling pressure. Candles start showing the upside isn't being held. Result, the trade closes in a loss. And this is the principle. A loss isn't a tragedy. It's just the result of testing a hypothesis. We don't get angry at the market for not doing what we expected. The market doesn't owe us confirmation. The only question is, what do we do next? And the right answer is facts, not emotion. Trade number 4, recovery with confirmation and a win. I recovered the same amount, $200, and enter up. Important, recovery can't be revenge. It has to be the next balanced decision when the market actually gives you reasons. Here I see confirmation that price is trying to recover again and the upside move is getting support. Waiting. And the trade closes in profit, plus $390. That's why discipline beats emotions. If I panicked after the loss, random entries, bigger risk, I'd just donate another mistake to the market. Instead, calm assessment, next step based on the situation. Okay, trade number 5. Recovery signs and continuation up. Next, I increase to 250 and enter up again. Why? Because the market starts showing recovery signals. Seller pressure weakens, we get a confident bounce upwards. Candles form with real bodies without lower long wicks. That detail matters. Long lower wicks means price keeps getting bought after dips. The market is nervous. But when candles climb more cleanly without constant deep stabs down, it often shows buyers are taking initiative back. RSI helps as confirmation too. During recovery, it usually lifts with one move, showing momentum support instead of collapsing on every step. So I enter up with 250, waiting, and it closes in profit, plus $487.50. Okay, series result, total balance, $1,165. Notice the logic. First we traded the bearish impulse from resistance, then we confirmed continuation. Then we tried a pullback and took a loss. After that, no panic. We adapted, the market started recovering, and we switched to the buyer side only when strength signs showed up. The market doesn't respect the people who always win. It respects the people who can take a hit and stay clear-headed. A trader's real strength isn't in risk, it's in knowing when to stop, think, and take the right step. Trade consciously, stay calm, and remember, consistency will always beat adrenaline. If you want, I'll leave my short 1-minute checklist in Telegram for the combo, level plus candles plus RSI 14, so you can use it as a protocol, not intuition. Link in the description. Subscribe, hit like, and I'll see you in the next iFinex breakdown.